Wednesday, everybody. Welcome to the Closing Beat. How you doing today? Better day? You guys feeling good? Hey, this is a quick show that we do called The Closing Beat, and we just talk about the stock market, we don't need to go through the whole thing today. We talk about the stock markets, we play games, we go over and answer your questions. I'll answer those at the end there. We are playing a game. It's called Guess the Dow, bottom right-hand corner of your page. You can take a guess, tell me where you think the stock market's going to close, the Dow in particular. Next week, if you're the closest without going over, I'll send you a $100 gift card. What else do we have? Jazz Artist of the Week, George Duke, not George Benson. George Duke's got a song called Chillin'. If you just like that sort of laid-back, smooth jazz fusion kind of thing going on there, you'll enjoy that. Check out the song Chillin' by George Duke. Also, our class tomorrow for customers in Wine and Wealth, which is behind here. We will cover tomorrow some current events. We'll go over the stock market a little bit more. We're going to go over some stress testing ideas. I'll take you guys' investments and I'll stress test them for you. I'm going to hopefully going to be able to do that live as it happens with you guys. So we'll do that tomorrow night. If you're one of our customers, every week we do a class for you guys, teach you something new, help you out, learn something, get you through things. Feeling good or bad, we'll work with you on that. Stock market today, you got 495 to the upside for the Dow. Most of that's going to be because of Boeing. S&P 28 points to the upside. The NASDAQ faded away into the close, went negative. There were brief points throughout the day where it was negative, but that is your weakest index of the day. The Dow outpaces the S&P 500. We got a stimulus package in the works. It didn't officially get voted on, but it's largely, known, or sort of, what would you call it, like a handshake deal? Where they basically agreed they just got to get it to the floor, they got to vote, pass it on over, let them vote on, the House vote on it as well. And I guess there was just some little things they had to change, nothing official. So they're working on that. I didn't read through the whole thing. It's not very fun to read. I tried. Payroll tax cut for employers, not employees. And it's actually just a temporary cut where you have to pay it back. It's sort of a payroll tax loan, or you get to put it off for a little bit, and over a period of time, you're going to pay it back. That's not very cool. $500 billion is going in direct payments. I think it was somewhere around $500 billion for direct payments to Americans. That's going to be about $1,200 a person. And here's the cool thing. It's exactly the same way as the video I did last Monday. So last Monday, we went through the whole thing and said, what if they pay you? How's it going to work in detail? How do you know if you qualify and all that stuff? And it's exactly the same. I mean, it's freaky how perfect that was. So check that out. Last Monday's video, the government stimulus video, it's just changed the date from 2008 to 2020, and you have the same bill, basically. I mean, it's incredible. Anyways, got $130 billion going to hospitals, $50 billion in grants to airlines, and then the payments to you guys is basically as expected. States, businesses all going to get $500 billion there in loans, guarantees. State of Florida did something as well. So that's what you have there. Let's take a look at the stock market. A little bit higher today because of that. The S&P higher on the day, but it did fade into the close, loses a point for that. The Dow was strong for the most part for the day. Doesn't matter. It was 2 days in a row. Did you know that after 32 days, we finally have a 2-day win streak? It has been 32 days since we've seen that 2-day win streak in a row. The last time that the Dow went 32 days in a row without having a 2-day win streak, I'll give you a hint. Sly and the Family Stone and Dave Brubeck were the headliners at the Newport Jazz Festival. Anybody? What you got? It's 1969, actually. So you got to go back that far to find a time where we've done 32 days or less. 32 days or more. Actually, the last time that happened, I had yet to turn 2 years old. That was in February of 1984. We went 33 days without a streak, of 2 days to the upside. So very interesting there, I thought. Now, let's take this a step further. I've got a little bit of geeky stuff to share with you here. I've got clients going, on the way down, you got clients going, oh man, is this thing ever going to bottom? And now we're up for 2 days, and now everybody's going, did I miss the bottom? I think that's really interesting because on the way down, you're scared, but you want to nibble a little bit, and then on the way up, you're like, oh no, did I miss it? You didn't miss it. You're going to be just fine there. So here's the question. If we're already up these 2 days and we start to pull back, so let's say it's a sell on the official news type rally, meaning you buy on the rumor of the stimulus deal, you sell on the actual news of it becoming official. That's common. It happens with Apple actually more than you'd think. We did a great study on that. Anyways, what do? Are you looking to sell into this, or what will everybody be looking for in terms of what they'll buy? And believe it or not, you can actually prepare for this right now. So I wanted to go through this with you without making any specific recommendations. Just wanted to kind of explain how other traders and investors look at the markets to start to prepare for the stocks that they're going to buy if the markets fall. Here's how you do it. So we've got the S&P 5-day performance on the chart. That's going to always stay your purple line. What we're going to do is we're going to look for stocks that have outpaced the S&P. It's not too hard to find out there, but you're going to look for stocks that perform better, preferably stocks you're interested in already, if that's something, if you happen to know some names. For example, I like to eat at Chipotle, so I thought of Chipotle first. I seem to always think of Chipotle first. But here's what you got. Over the last 5 days, Chipotle has dramatically outpaced the overall market. What you're now looking for is, does Chipotle pull back softer than the market when it does? Meaning if we lose a couple percent one day, does Chipotle hang in there and maybe lose nothing, or maybe only lose 1 or 2%? What happens in there? Is it showing relative strength against the overall market? You can go down a list. We'll look at FedEx. That's also in the mix. You know people are going to be looking at that. That's obviously discounted. Maybe it's a little bit aggressive, but the idea of, does FedEx pull back and not pull back as much as the market? Here's Tyson Foods. I wanted to sprinkle some different names in there. Microchip Technologies, Western Digital. You've got Ulta Beauty Salons. We have NVIDIA. That's also one we could put on the list. And what else? Salesforce, and let's throw in Netflix. There you go. So here's what we'll do. We'll put them all on the chart. The dark purple line at the very bottom is the S&P 500. These are all just a handful of randomly picked stocks. I'm not saying you buy these stocks. They're just randomly picked stocks that have performed better than the overall market. Not too hard to do that. So what you do now is you've got this list and you watch your chart going forward and you see, all right, how many of these held up while the market's pulled back? And so that's what people are actually looking for. They're looking for outperformance on the first pullback of the market. You get my drift here? So we put in a bottom. Maybe it's a bottom. We don't know. So when the stock market starts to pull back, you don't want to guess that you're just buying a stock that may have bottomed. You want to actually look for stocks that aren't falling as much, and then you at least have some better reason to buy them other than just randomly buying stocks. Does that help? Let me know in the comments below. I'm not sure if I messed all that up, but that's kind of the preparation you do in preparation for the markets to fall, but also how you're going to respond to it if the markets fall. The beauty of it is it doesn't matter if the markets make new lows or they only pull back a little bit. You're able to see that relative strength. Just need a couple days to see these differences. Doing good. Yeah, if it cut out for a second, that is that's back up. Yep, it is going to cut out for a second. I'm watching the delay here. Sorry about that. So it comes right back in there. Cool. So we're all good there. Okay, moving on. So you ever wonder what people are going to buy? What are they going to, or what did they buy? So that was what they're going to buy. People are going to look for relative strength. They're going to find those stocks. They're going to be looking for those stocks. What have people bought already? I did a really interesting study here I want to share with you real quick. A lot of geeky stuff today. I don't know if this moves the needle for you, but we're going to do it anyways. Here's what we did. We did a study. We broke the S&P into 10 different categories. We took all 500 stocks, we put them into 10 different categories, and we said, okay, from the beginning of the the February 19th virus beginning there to Monday, right? Show me organize the stocks from the best performers to the worst performers, and then we broke them into groups of 50, right? So it's called a decile analysis. So we went through and just broke them through in groups of 50 there. Okay, now what we wanted to do, and this is just a picture of all the stocks here, so you can see what I'm talking about. They're alphabetically sorted at the moment, but what we did is we said, okay, from all the way over here, actually I didn't save all of it on the screen here so you could see it, but we used the year-to-date performance leading all the way up to Monday. What do we have? So for example, Allergan. Year-to-date performance minus 25%. American Airlines, we know, has been hit worse. So we tallied up all of this and we broke them into groups of 50 or 10 different groups of 50 so we could then look at them very quickly and see the worst performers all the way to the best performers. And I'll show that graph with you here in just a moment. Okay, then what we did is we took those stocks and we said, okay, yesterday, Tuesday, which ones were the better performers? So if we were to break imagine taking the S&P 500, you break it into those 10 groups, and then you pretend those are all individual portfolios, and I'll give you the stocks and stuff in a minute. You pretend they're all individual portfolios, and you say, okay, yesterday, which one of those 10 portfolios did the best, the worst, whatever? Where was everybody buying? See, we know that on the left-hand side, these are the worst performing, that's the worst performing portfolio. Column number 1, and I'll show you. Column number 10 would have been the best performing portfolio out of all of them, but we compared it to yesterday's performance. I hope this makes sense when I show this here. So let me go back over here, and we're going to go through this study one by one. This is a little different than what we normally do, so if I got to do it again or I'm way off base, just yell at me. Okay, here we go. I just put a little slide together. So we sorted the S&P 500 by percent change from February 19th to February 23rd. We broke them into 10 different categories or deciles if you want to be fancy. We then compared the February 24th percent change of all of those compared to their individual decile. What you found was everybody yesterday, or you could see by the chart there, everyone yesterday went and bought the worst performing stocks, right? They didn't go buy your strong relative strength stocks. They all went to the worst performing stocks. That would be, the worst is Norwegian Cruise Lines, Apache, Royal Caribbean, Halliburton, Occidental Petroleum, Carnival Cruise Lines, Capri, Devon Energy, Marathon Petroleum, Kohl's, things like that. That's where all of these stocks are. They're in this camp right here because they're the worst performers. As you move towards the best performers, nobody wanted those. So nobody wanted the stocks that held up the most. They wanted to go buy the severe discount. And so that really drives home the point that I've been making. People want to buy discounts. This is big money. This is also me and you and everybody watching. But the big money goes and buys the discount. They recognize things that are oversold. Remember the Shark Tank analysis? United Airlines, Discover, we did all that whole, rigmarole thing. So the bottom line is people went and bought discounts, and this is now physical proof that people actually bought discounts in the market rather than just randomly picking stocks or choosing index funds. They went and bought the market. So I hope that helps. That took a lot longer to prepare than it did to share with you. It doesn't seem fair, but so let me know what you think about that. I will take a look in a second to see what you think. Okay, let's go through the sectors. Every single sector was higher today. We'll go over some more data here in just a moment, but every sector higher today. We'll look through some of the other ones that sold off towards the end of the day. Communication services, unfortunately, you had Facebook lower on the day. Facebook's noticing weaker ad sales, higher usage by customers, weaker ad sales, which if you have higher usage, you would think this is the time to advertise on Facebook when everybody's just using it more. But ad rates, obviously, that's one of the first things to be cut from corporate budgets. So Facebook was lower. You had Alphabet a little lower on the day, 2.5% as well. And then Netflix, which has been strong throughout the last part of this decline, also pulled back about 4%. The problem is you take those three stocks, you basically have 50% of the XLC. So if those three stocks are down, there's just no chance you're going to have the XLC moving higher or the communication services downgrade. I thought one other one here was interesting, Omnicom. So Omnicom downgraded to 73 by JP Morgan. The company says that the virus is going to have a material impact on our business. They expect to decrease their cash flows, and yet the stock was still higher. Right? That's one of those instances where you go, all of the news is bad, but it's so oversold, people decided to give it a shot. And that's the environment that we're in. It's a little tricky right now. REITs a little higher, 4.5% on the day. Now 15% off the lows. Was a broad-based rally. And another interesting story, Simon Property Groups. The properties are closed. But yet the stock is bouncing, right? It's kind of interesting there. It's because it sold off so much. The stock is up 13% on the day. You have no other good reason to assume that should be higher today. Home builders up 7% on the day, and it's now up 20% over just the last 3 days. So you can see a sector there bouncing a little more aggressively. Transport's up 2% on the day. That's your airlines. American Airlines 10% higher on the day. JetBlue was another one higher on the day, 20% again for JetBlue. And then you've got United Airlines. Check this out. This is another one of those little things you got to pick up on. 10% higher on the day. United Airlines cuts their schedule by 52%. It's another one of those examples where some of the bad news is now good news because the government's going to give them a bunch of money, or that's the perception, the understanding, at least at the moment. 1.75% on the consumer discretionary area of the market. That's going to be Nike helping out there. Nike had a 10% gain on the day. Beat on earnings, just looked good for Nike. It was the first time, by the way, that we got to see a company that has a decent exposure in China, a nice exposure in China, how it affected them. Because some of this earnings has to do with when it started over there in old Wuhan. So that was pretty good. It was a good sign to see Nike basically say, yeah, we had to shut a bunch of stores down. We're basically 80% back open. Not a big deal. If the same happens here in the U.S., not going to be a big deal. We're moving online and everything. So it was rather interesting to see that. If that is a precursor to how earnings season goes, now you've got a recipe for people to realize they overreacted in terms of selling stock on a way down. We'll see. It's too early to tell. I'm not making like predictions or anything. Oil, very quietly sitting at lows, not interested in bouncing at all. If you look at the price of oil, it's down over 60%. You've got supply all over the place, right? There's no good reason for a huge bounce in oil here in the short term. $24 a barrel, that's under $2 a gallon in our area here and dropping. Gold sitting at those highs there. It's backed off highs just a little bit. The volatility also has dropped over 50% in the last 2 days. Not sure if you care about that, but I found that interesting. Moving on, you got 2% of the S&P 500 above the 50-day moving average. That's 10 stocks. We've been floating around the 2% area. There's not much going on there. It's a slow progress in terms of that data point. Now, what I found interesting here, there were 0 new highs today. And it just occurred to me, I'm like, okay, well, if there are 0 new highs, and there have been 0 new highs all week, what's the closest stock to making a new high? Like, what stock do I need to do something magical so that I can say 1 new high? So if you dig through the list, Citrix is the closest. They've got 7% left to go. So a 7% or greater update for Citrix means we have 1 new high. Newmont, 7.5% away. That's the gold mining company. So a 7.5% gain for them, which is absurd to think about that in a normal market. But right now, that's basically 1 good day for them. Akamai, AKAM is a ticker symbol, 10% left to go, and Costco's got 11% to go. So those are the stocks that are closest to hitting new 52-week highs. It's not a good sign. If volatility drops in the market and we start sort of petering out, going sideways, I don't see that happening. But if that does happen, all of a sudden you've got a higher hill for these stocks to climb. But I just thought that was interesting to cover. 5 new lows on the day, not too bad. You got Verizon making new lows, a little extended in the short term. Old Dominion Freight Lines, but let's wait. Hold on a second. Old Dominion Freight Lines, that's a split. That's not an official low. Never mind. So 4 new lows on the day. Waste Management down 1.23%, breaking off of its lows, though. Looked pretty good there towards the end of the day. And that's all we have for that. There's other ones we can cover, but let's move on. Disney looking good, 2.6% there. That is officially beating my Twitter position in the Stock Madness. If you happen to be paying attention, Saturday we posted that video. This Saturday we'll do an update as well. We're playing a little game, a little bit of a challenge here in the office of the Stock Madness. It's just the same as March Madness, but we're doing our version. We're calling it Stock Madness. Since you guys aren't getting your March Madness this year, we got to do something. And then AMD was beating my Intuit, but now, nope, by the end of the day, Intuit's still a little bit higher, I believe. So that's what you have there. And we will move on. Okay, in the so what we're going to do tomorrow for customers is we're going to focus on some of this virus stats there. But in New York City, we're just starting to pull some of the data there. In New York City, 95% of the people that have died, there's been 192 deaths as of last night when we pulled this. 192 deaths, 95% of them had a pretty serious underlying condition. They tracked diabetes, they tracked hypertension, they tracked asthma. Only 3% of those were under the age of 44. No younger people than 18 have died. So some of the data that we're just kind of looking at there, this is not my personal data. I mean, it's just we're just kind of reporting what New York's saying there. So that's kind of interesting. We'll try to expand on that tomorrow in our class. The number of new cases compared to those that, so the number of people being able to get tested is just skyrocketing, right? It's incredible. But the number of people that are getting tested that find out they do have the virus, that's going down. The percentage of people tested versus the people that are actually getting tested. So that's actually going down. That's a pretty good sign there. But we'll see. I mean, that's kind of outside the scope there. And also, clarification, thank you to all of you. I mean, I'm not perfect, so I love that all of you help me out on this, actually sending me links, too. You do get to extend now your your Roth IRA and IRA tax filing. As of last week, that wasn't the case, so I went by that. It has since been updated. Thank you so much to all of you that have showed that and shared that with me, the direct link. I did verify it. You have until July 15th. So if you haven't filled up your IRA, remember, time is the most important thing in IRAs because they turn off the clock, right? At the end of the tax filing deadline, now extended, the clock is off and you can't go back in time. So what you want to do is go back in time as much as you can while that window's open. Now it's open a little bit longer, so that's awesome. Finally, we've got earnings. You got Luckin Coffee tomorrow. Uh-oh. Come on now. I know some of you, I've seen that LK posted a few times there. We have Signet, we've got GameStop, KB Homes, Lululemon, and Restoration Hardware reporting earnings tomorrow. So that'd be interesting. A couple things to go on there. We also have the initial jobless claims coming out tomorrow. So that'll be interesting. That's going to be one of the biggest spikes you've ever seen, and I'll try to pull that together for you and share it with you if I can. All right, that's all I have for you here today. Let's see if you have any questions. I'll do my best to try to answer some of the questions if I can. You got a couple smokers. Is that what? Analyzing the little data that I have there. Oh, man. Unemployment numbers. Oh, there you go. Yep, coming out tomorrow. The initial jobless claims coming out. That'll be out, well, that'll be out before the markets open, actually. That's an early number. So that's that one. There you go. Oh, the other part that I wanted to add to that, Tandra kind of reminded me there. So in a bear market, and I'm hoping to put this together for you, but in a bear market, if you do what I did and we break down the S&P into groups of 10, and you look to see where the money's being spent, in a bear market, if the money's being spent on the worst performers, that's a bad sign for the markets moving higher. That is not good for a bear market. I don't have a clean way to show that. We're working on it, but that's not a good sign. In a bear market, you want to see that money is actually on the other side of that chart that I showed, going to the best performers. That is what tends to lead to a real significant bottom, something you can really grip your teeth around, that something's going to happen there. The fact that all the money went to the discounts, think about it, that's just people saying, I'll scoop that up, that's way undervalued, I'll take a little of that, it's undervalued. Their opinion or their emotions about the economy and the stock market could still be very much bearish, but they can't resist a discount. What we want is the leaders to be getting bought. Similar to the first thing I explained to you today, watching those leaders pull back. That's what you want to see. We don't see that right now, so it's too soon to say that was a strong bottom. I would agree with Tandra there that this for now is just a dead cat bounce, right? We'll see what happens afterwards, but I don't like that data point. I meant to share that with you. Cool. I like it. Yeah, I know. I don't know what's going on, man. It says that it lost the connection for a second and then it popped back up. I don't know all this. I only know like 5 buttons, and as soon as something else happens, I don't know what to do. If it's somehow cut out during that, we can go back and maybe do this tomorrow again for you. Yep. Walmart, Walgreens, things like that. All the money has been coming out of that, going into these discounted areas, and some of the leaders, the tech stocks that were leaders and things like that. But yeah, Walmart had a run, Costco, Kroger, had a run, and so in this market, it's a stock pickers or traders market. So when you get short-term pops, they're not 2% pops. These are 15, 20% pops. Very normal for people to say, well, I don't know what the long-term holds. I'll take my quick profit and go look for something else. Something pops, I'll take my quick profit and go look for something else. Cruise lines pop a little bit, they get out. So you're going to see a lot more of that volatility, or Jello on a plate, if you will, right? It's kind of hard to figure out what's happening with that Jello. There you go. We have jobless claim. We could do that. Yeah, we could look back and see results, market performance and everything from 2008 when that spiked. That was a longer spike. This will eventually be just a weird blip on the screen. This is not going to be a long, drawn out, continues to go millions and millions. I think you're going to see it jump from whatever it was last week. We had like a 70,000 person jump. I think it's going to be over 2 million, if I had to guess, maybe more than that. It just seems like that's not going to be good. It's already priced in the market, by the way, but it just seems like a tough one. Does the stock market always lead to a recession? No. The stock market falling, I think is what you're saying? No, not at all. October, November, December, we fell over 20% of 2018. No recession. It was just a 21, 22% pullback. Cool. Yep. Long term, you're holding, oh, cool. There you go. Getting in there. I like it. Well, sorry about that today. If it did disconnect, I'll look at the comments a little bit later. If it did cut out when I was covering all the stuff that I took a long time to put together, then I'll share it again with you tomorrow. But you guys have a great rest of your day. Thank you for watching. And we'll be back then to cover it all over again. Let's see what happens. I think tomorrow's going to be an interesting day, probably an interesting rest of the week as well. So we'll cover it. We'll be back at 5 o'clock tomorrow, and enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything to really help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.